Hey traders, welcome to Charts and Coffee. Great to see you all here. Thanks as always for being a part of the Caffeinate and Dominate crew. Great to see you all. All right, so let's take a look at what we've got here on the calendar to kick off the week. And just a quick reminder in terms of what we're dealing with on the calendar. It's still pretty quiet. We're going to have a pretty quiet look at the, here we go, pretty quiet look at the week until we get to the ECB on Thursday. So yeah, we've got the typical crude oil inventories and things of that nature, but ECB on Thursday and then CPI on Friday. That's going to be the bulk of the two major hot zones this week. And I put that in the notes yesterday, and that's pretty much how I'm operating this week, under the assumption that, we could probably see some fairly normal action until the marketplace has to react to the central bank, the European Central Bank, messaging on monetary policy. And then what does the CPI and inflation gauge mean to really kind of complete the saga from last Friday's NFP to this coming Friday's CPI, two major economic pillars for the Federal Reserve to either continue on their rate hike expectations for June, for July, and then going into September, which is very likely not going to be a month where we're going to pause, but rather go from the, as you can see here, the 1 3/4 point to 2.0 interest rate, central bank rate, to, as you can see here, 2.25 to 250. That's the column that suggests we are not pausing in September. So you're talking about 1 1/4. That's what we're talking about. 1 1/4 in hikes between now and September. So that's the way I'm going to look at the way pressure on equities will likely continue, and also pressure on bonds. So yes, I am looking for the equity markets to start moving lower again, and we'll talk about what those support levels are when I see you all in the futures room for the chat, and then I'll put them in those levels in my notes as well for those of you that are keeping track of that from the mastery. I'm still looking for lower lows in bonds. It's not surprising after 1, 2, 3, 4, 5 days of resuming the move lower out of the wave, that at levels we've seen support recently, we're going to have a little bit of a bounce, especially with some weaker equities, but the trajectory is still very much to the downside, gang. And this bounce does not give us enough to work with on ZB nor ZN. And that will go back to also TLT and IEF, which definitely, gang, the path of least resistance is still lower. All right, so that's just kind of a quick look at where we are to kick off the morning, and really just sort of my overall take of how I'll be looking at the week. All right, so let's just dive into the questions, shall we? And keep in mind, gang, any of the Federal Reserve comments that we'll see from FOMC members, keep those front and center, keep those times front and center. We don't have a lot this week. Actually, you know what? Let me double check before I say that, because sometimes the schedule can change, but I don't believe we have a lot by way of FOMC member speak, unless they've added someone to the calendar. And survey says, yeah, not so much. So I think we're, now that doesn't mean we may not see interviews and sound bites, but it seems to be pretty quiet on the FOMC chucklehead front. All right, so kicking it off, Tim, good morning. Thoughts on T? T is a part of the IYZ, and T is a relative outperformer to the upside. And since it is double green, right, we look for buy the dip. Could this be a setup into earnings? Yes, this could be a buy the dip into earnings scenario. Yes, especially north of 20, north of the 200 propulsion, north of the wave, consistent green grab, double green structure. So yeah, yes, across the board. As far as the zone You could start as high as 260 as long as the green propulsion dots are there. And then you got it, 240. Tim, perfect. Perfect. All right, next up, thoughts on ATVI. Sure. Coop, so ATVI is, it looks like it's waiting on something. Clearly we had that move higher on news, and then now it's just moving sideways. Um, it's such a prolonged period of sideways movement, and you've got, let's see, long put 75 strike. Coop, when I look at what my tools tell me about what's going on right now, I respect the trend that was, even though we've had a prolonged period now, about 2 months of sideways movement. I would still have to be a little bit bullish. Yes, there's a possibility for a gap close, but for me, Coop, I don't know which way we're going to go, because this is not a market where I see that I have a clear edge. So in that situation, I don't feel that there's any need to put on a trade, because I don't have an edge. Now, if you've got something that you're working clearly follow that, but I don't have anything there, my friend. All right, next up, SSM has been an eye opener. Cool, Alan. I hope in a good way. I got there with the trial. I'm looking to do that with you in the future. So, I think if anything, when you join any of the different services here, rooms, whatnot here at Simpler, what you're going to get is a look at that trader's view of the market, right? And so I think it's really important. And this is just an aside, Alan, but Alan brings up a good point. When you're here at Simpler, gang, there are many, many of us who have a lot of takes on the market. So to look for some sort of homogenized view that we're all going to share is probably not going to happen. To look at taking a little bit from one trader and a little bit of another trader, you're going to make a bouillabaisse of mess, right? And I think that's a challenge anytime you're learning. So I think when you're able to sit in with one of the traders, one of us that's on the mic, we're going to do our best to share with you all what we do with full transparency. For that moment, you are in our little bubble of market beliefs and tactics and tools, right? So the less you take a little bit from here and there, the better off you're going to be. And then what's going to happen when you get immersed in a single trader's approach, what you'll be able to figure out is who you resonate with, right? That's always the point for all of us to say, look, this is how we do it. And really in the most respectful way to say, either this works for you, it doesn't. And I will from time to time tell traders, look, if my way and my tools don't resonate, oh my gosh, no hard feelings. That's why there's so many of us here at Simpler sharing what we do, because our hope is somewhere along the line, as you meet different traders and their styles and the different markets, options, futures, ETFs, equities, day trading, income trading, you'll find what works for you. And so that's, so if it's an eye opener, I hope, Alan, it's an eye opener into what I do. That's really what I focus on the most, right? I'm not really worried about what anybody else is doing, because now what I'm doing is I'm mixing recipes and I'm making a mess, and those messes become confusing. So I hope that makes sense. All right. And thanks, Alan. I appreciate it. Mind the gap. I have July at the money UGA. Yeah. Okay. Very nice. I don't know when you bought them, but is this pullback? I don't see much of a pullback, friend. I would let it ride. I mean, I don't know where it's going to go. And frankly, nobody does, right? As I like to say, we focus on process, not prediction. And for my purposes, that's not a pullback. It's an inside candle within a parabolic trend. So my advice is always this. What was your first target? What's your second target? And what is your trailing stop? Because if you're concerned about the market pulling back and getting you out, put a trailing stop. That's the safety net. If you haven't paid yourself yet, again, not really knowing where you're in from, my friend, great trade, first of all. I hope you've paid yourself at some point because you got in earlier. And in which case, now you have the luxury of moving to a break-even stop. And that's what I teach, is ratcheting with the trend process. So nice trade, my friend. You are right now surfing a big wave. Let it take you to shore. Make sure that you've got your break even, if not trailing stops in, that you've paid yourself, realized a profit, reduced your position size, and then you can see how high is high. So good stuff, really good stuff. All right, gold. Karthik. So gold, I'll tell you what, gold is rather frustrating right now because I would like to see that real yields are heading higher. As bond yields are increasing, and if inflation stays flat, then real yield, which is that chasm between the bond yield and the rate of inflation, that chasm is increasing or going up, and that should put pressure on gold. And I think we are seeing that with the resumption of the downtrend in bonds, which is the uptrend in the yields. Okay. The idea then becomes, are we looking at movement to the downside because the real yields are heading higher? And why do we keep getting stuck? Well, we might be stuck at a ceiling in real yields. So is the path of least resistance down? That's still my expectation based on the tools and the candles and the structure. And then, yeah, I'm still short. So we're in no man's land. I've got my entry. I've got a small, fairly insignificant, unrealized gain, but I have not yet reached my target. And if I haven't been stopped out, and if I haven't reached my first target, or even sometimes occasionally when I give you all an optional target in the mastery, it's just no man's land. I just kind of sit through it. This is where patience and checking the validity of the setup come into play. So thanks for the question. And the simple answer is yes. Jimmy, why is during the summer day trades using BR not reliable? So no, Jimmy, it's not. So thank you for the question, but no, it's not summer that breach retreats are not reliable. It's this year. And the reason breach retreats are not working as well as they would have in 2019, in 20, and 21 is over the years that I've been doing this breach retreat thing, which is the late 90s, when we have a trend, when there is a clear, usually uptrend, breach retreats tend to work really, really well. Or we have a clear downtrend, breach retreats tend to work really well because there's a general path of least resistance in the broader sense in the market, in the indices, or whatever you're trading. 2020 is a year of chop. 2020 is a year of uncertainty about monetary policy, and it's a year of chop. So it's not summer, right? It's this summer. It's this year, and that's where I have been shifting to other gears, which is, all right, if I'm dealing with chop, how do I identify chop? How do I find those upper and lower edges, right, for my edge in a range? And how do I control risk? And how do I make that risk as small as possible in order to visually to say, all right, this is my entry zone, and then this is my risk, and I have a much better idea of how to engage the upper and lower ranges. That's really what this year, not just summer, but this year is about. So yes, that mindset of 2022 is carrying into summer, Jimmy. Yeah, which is why I've been talking as much about the HPMRs as I have. And those are those zones, right? There's your resistance, there's your support, there's your support, there's your resistance. And this is based on time and volatility. Now breach retreats work really, you can look at, they'll work sporadically, but I'm finding the probability right now is better with time and volatility. So these are all, setups that we've talked about for many, many years. But now the focus on time and volatility is because of the market behavior throughout 2020. So I hope that makes sense. And thanks for the question. All right. Let's see. Next up. Hey there, Stanley. XLU. Sure. Let's go take a look at XLU. Okay. So first of all, XLU is a defensive corner of the market, right? XLU and even XLP become places where we see flow when there's not risk appetite. How do we know risk appetite? You're going to see it in consumer discretionary, tech, communications. That's going to be usually where you see risk appetite. I don't have a trend on XLU yet. However, let's crack open the multi-chart, and are there any signs that we have individual stocks that are trying to organize into a trend, or at least individual stocks that are not printing red grab candles? So I would look at EXC, I would look at XEL, I would look at ED, I would look at AEP, WEC, SO, even maybe DUK. NEE has made it north of the 200 propulsion. So, I mean, we're starting to see signs that XLU with more green grab candles at the tide and at a bunch of individual boat levels are ready for moves. And as far as breakouts, my requirement is that I have 4 blue grab candles. So I'd keep an eye on a momentum breakout, say in something like DUK, maybe even SO. So if we have a number of blue grab candles, at least 4 in a row, or a narrow Darvis, that would be a pretty big confirmation, a really clear confirmation of a momentum break, but bullish. I'm looking for that movement to the upside, which seems to indicate sort of the neutral and bullish momentum we're seeing when I look at the structure of these individual charts. So, by the way, where is that structure coming from? Those trade flags, those Momo green, trend yellow, that's bullish momentum, neutral trend. And if the momentum continues to stay green, there's a certain inevitability of the trend also following suit. All right. So hope that helps. Thanks for the question. All right, moving on. Nancy says, how do I think Yellen's speech will impact the market? I don't know, Nancy. You know what? I don't remember actually. I'll have to take a look at my notes, and thank you for the reminder to check. Well, this is why I have 4 planners, right? But let me talk about generally. I don't know how it's going to affect it because I don't know what she's going to say, and I don't know how it's going to be received. And I don't know it's a perfectly good place to start. You've started at the exact right place, Nancy, which is you know that she's speaking and you need to know when she's speaking. So at this point, you've got the hot zone, and now you're just going to look for volatility. So I'm not here to predict where the markets are going to go because I don't know. However, we can say there's likely to be a lot of volatility and impact. And if that volatility and impact carry price to levels that technically represent entry triggers, then it's useful. If not, Yellen alone won't get me in, but Yellen taking price to levels that are triggers will be useful. So I hope that makes sense, Nancy. And thank you for the question and the reminder. All right, where do I, let's see. ATVI, yes. So we talked about ATVI before. Again, the acquisition is old news. Now does ATVI have any reason to move, right? All right, next up, Schlumberger. Double green, Donald, good eye. It's definitely going to be a proxy for OIH. That's less expensive, so I like that. And it looks better, I believe, than Halliburton. Yep, Halliburton's still yellow. Although you see the inevitability of green grab candles, green momentum, yellow trend, likely it's going to go the way of the double green like Schlumberger. This is buy the dip, and we got to wait till that happens. Aggressively, can you buy a Darvis dip? You can, but please make sure it's aggro position sizing. JG, WBD. All right. So when you look at WBD, beautiful downtrend, double red, sell the rip, very much along the lines of the kind of move we saw on 527. So something up into the wave or the Darvis level around $18.50 would be good. Looking bad? Well, looking good if you're a bear, right? So looking bearish. I try to remember there's no good, bad. There's bearish and bullish. And I agree with you. Looking bearish, sell the rip. Definitely something we want to take a look at. All right, gang, just like that. Boy, that 20 minutes goes by quick. I will see you all in the futures room in just a moment. I'll see you all in the options room for the close today. My mastery folks, I'll see you also for the close. In the meanwhile, have a great morning. Be good to each other. And I'll see you all in the rooms later on today.